Yeah, this one came to me. I was looking at the tech sector. I was pretty excited about the chart. Obviously, it's been doing pretty well. Nasdaq's leading the way, and I just thought, you know what, we've done some, we've done some fringe companies, and we've done some stalwarts, and I thought let's get the mega cap boys out here and see how they stack up one against the other. So started looking through the tech sector. The top companies, I guess. And these three just kind of jumped out at me. They have differences and they have similarities, from a business perspective, but they all end up in the same space, and that's really the reason I chose it. And then when I actually started going through the numbers, I thought it was pretty cool too. There was some surprises in there that I didn't really expect. So we'll start with Apple. Everybody, obviously everybody's going to know these stocks. If you look at the chart of Apple, there's nothing to see here basically until it breaks 150. Everybody's looking at the same thing. Ascending triangle. It's tried a couple times to get through there. It's going to get through there. It's just a question of when. So chart wise, I like the look of Apple. Numbers wise, obviously it's I think, weren't they the first $1 trillion company or something? Weren't they the first
They were
trillion
in the US.
valuation? Yeah, in the
US.
US.
I think
Yeah.
it went,
So
what it go? It went Apple, Microsoft, Amazon, Google,
something like that.
something
Yeah.
like that.
I
Yeah.
thought they were number one anyway. So obviously, mega cap company. Their dividend yield is only 0.6%. They've been paying increasing dividends for 8 years. They actually started their dividends in 1990, and that actually threw me
I'm a
for a
little
loop.
surprised by that. Yeah.
Yeah, so was I, because I thought it was much later than
They
that.
weren't they weren't they weren't that until after the iPhone. They weren't even a juggernaut. That's actually impressive. I didn't know that went back
Yeah.
to 1990.
So yeah, anyway, that kind of threw me for a loop today. Payout ratio is a paltry 16%. So they got lots of room to pay more dividends. Whether they do or not
Can I
remains to be
can I
seen.
make one point real quick, Greg,
Sure,
on that?
sure, yeah.
Apple, in lieu of increasing dividend, does the most stock buyback program in the history of mankind.
And fair enough, that's
Yeah.
good too. But I also don't mind the stock buyback, but I really like the dividends coming into my account too. So
Well,
anyway, it's all good.
and again, don't want to belay kind of what you're doing here, but the way Apple sees stock buybacks is a dividend.
Yeah.
That's how they personally see a stock buyback, is they see it as a better version of a dividend because of the price appreciation that it results in.
Yeah, and I totally get that. And again, that's their perspective, which is great.
I agree with you, by the way, Greg. Like I'm
my
with you.
perspective is show me the
Yeah.
money.
Yeah, give me the money. Give me the money. I'm with you. I'm just saying, I just wanted to share Apple's perspective because that is their perspective.
And it makes sense too, right? Good companies do that. So, if they want their price to grow, that's what they're going to do. So, anyway, PE ratio is around 29, which is in that ballpark for that space there. Assets, liabilities. You're going to see that these companies are just rock stars, but there is a bit of discrepancy in some of these numbers. So, Apple has 324 billion in assets, 258 in liabilities. Their free cash flow is $95 billion, which is that's a fair bit of dough. They can handle any challenges that may come at them. So net income increasing. They've only had 1 year. The last year they had an increase in net income. The 2-3 previous years to that they faltered a little bit. So weekly options they have, and I did a covered call closest to 30 days at the money. Came out to about 2.07%. So a decent cash flow there as well. Sales growth this year, they're looking at around 29%. Next year, they're expecting around 4%. So a bit of a drop off there. So that's kind of the numbers for Apple there. Like I said, chart looks good. Company's solid. You're going to see all three of these companies are very solid. But that's kind of the take on Apple. Next up, we got our friends at Microsoft. So technical perspective, we've actually talked about this. I think I talked about this on TradeMaster a couple of weeks ago or something. I can't remember. Maybe it was in Lounge. But high base pattern here, waiting for that break at 290. You know, really attractive here, showing a lot of strength. You know, running up above that 20 MA for a while there. Just doesn't even show signs of slowing. Looks like they had a somewhat decent earnings there as well. Their numbers kind of stack up like this: $288 stock. Dividend yield is 0.78, very close to Apple. Dividend increases, they got 15 years under their belt. They started paying dividends in 2003, so much later than Apple actually. Payout ratio is 27%, so no big deal there. Their PE ratio a little high at 36 in comparison to Apple. Again, assets versus liabilities well in line. 334 billion versus 192 billion. They're sitting on 56 billion in cash flow. They have 4 years of consecutive net income increases. Obviously weekly options, and their covered call at the money was about 1.32%. Growth wise, you were looking at 16% this year and 12.3% next year is their expected growth. So some solid numbers from Microsoft there. So you know, you can kind of draw a few parallels here and maybe you know, make your decision a little bit tougher. And then I had to bring up Matt's favorite, IBM. So IBM chart, obviously not as attractive as the other two, fighting with the 50 right now. Much more of a sideways stock. If you could go to the 3-year weekly for me there, Ty. This thing just goes essentially sideways forever. Slightly down from a 3-year perspective here, but very close to the, you know, very similar to what the price was 3 years ago. So it's just that kind of stock, and that's something you got to take into consideration there. So their numbers are very different for being in the same space, but again, a different company as well. 140 some dollar stock, 4.60 dividend yield, 18 years of consecutive dividend increases. Been paying dividends since 1916. So they've got a couple of years under their belt for dividend payments. Their payout ratio is 110%. So a little bit of an issue there maybe. Their PE ratio is 24, which is lower than the other two. Sales growth this year, they're expecting 90%. That number doesn't seem right there. I may have to check that number.
Coming off where they were, I've seen some weird
Weird numbers. Yeah. So 90% is the number. Next year they're expecting 1.3%. So I'm wondering if I hit a zero somewhere or something. But
yeah.
So assets versus liabilities, they're 156, 135. So not as big a gap as the other two, which you know, you always want to pay attention to. Their free cash flow, they're sitting on 14.5 billion. They have 0 years of consecutive consecutive net income increases. They also have weekly options, and they're about 1.4% on their covered call. So 3 very different companies, you know, all in the same space, and really some really different metrics to kind of go over today.
I like it, Greg. I like it a lot. Tyler, I want to start with you. This is just you and me, bro. That's all it is. There's no Tim here to debate. There's just you and me. What's your take?
On the buy one, hold one, dump one, what's my take? Let's start with the easy one. It's kind of unfair for IBM to go against Microsoft and Apple.
I don't think any stock would beat those two.
It's just unfair, right? So no offense to IBM.
I'll offend IBM.
Yeah, well, I'm more I don't know. I'm more caring about IBM's feelings. I know it totally has feelings, and it's been looking. I feel like it's been benched for 8 innings over the last 20 years, and it's just watching Apple and Microsoft hit home runs every year, just wondering when it can get in the game. So sorry, IBM, you just weren't built the same, buddy.
You might as well put a dump next to my name on IBM, because it's going against Apple and Microsoft, and then it's IBM.
Yep. And here's the thing. If there's a redeeming quality to IBM, it is the dividend yield.
Well, okay. Can I ask a question on that, though?
Yeah.
You can't expect directional price on IBM. I don't, long term, I don't think you can. It's not in that stage of its evolution.
Right.
And they've tried to rebrand Big Blue multiple times. They're having a hard time doing it. It's tough to break a market perception. And IBM has a market perception of neutrality. It has the same thing that AT&T has had for years and years and years.
Yep.
Same type of analysis. And so if you're looking at the dividend, yeah, 4.6% dividend is decent. There's no doubt about that. But where inflation is going in the future, which I do not believe it to be transitory, 4.6% dividend, and if that's all you can expect, I just don't think it has the same ring that it used to.
No doubt. I want dividend plus growth. Thank you very much.
Yes.
But hey, I'm trying to highlight the one redeeming quality. Okay, that's what it's got to stand on. Absent that, it's like, what are you going to do? And you could say, well, I mean, maybe if it had better covered calls than the other two, you could bolster the argument, but it doesn't, right? The ROI is just not that great because it doesn't have the volatility characteristics that you would need. So you're just kind of left with there's not much there for this guy. Hence, it's the sell.
The real debate is Apple versus Microsoft, in my opinion.
I would agree. So Apple versus Microsoft. Look, I mean, I'm partial to Apple for a couple of reasons. The first reason would be and let me double check this before I say it. Yeah, the price range. So $150, much easier to play than almost $300 on Microsoft. Not a huge like variable, but all else equal, I'll take the $150 stock for reasons that Greg talks about all the time. Easier to build trades and buy shares and such. So that's 1 point for Apple. Second point for Apple. I mean, they do a lot. You talked about this with buybacks. I mean, they have so much money. They have so much cash. Microsoft does too, but
they did $60 billion in buybacks last quarter. $60 billion.
It's hard for your stock price to go down when the company is buying that many shares and it has.
They've done hundreds of billions in buybacks over the last 5 years. They're going to do hundreds of billions of more buybacks over the next.
Why you don't care about the lower dividend yield? You're getting the return in growth. You're getting the return in growth.
Apple made a strategic decision years ago to focus on buybacks instead of dividends,
and it hasn't hurt them.
They're the reason the market focuses on buybacks as much.
And thank goodness they're the biggest holding in almost all these indexes that we track. Yeah. They should be.
Yeah. So I think the dividend conversation when it comes to specifically companies like Apple and Microsoft, I do think we get caught up in the, oh my goodness, look at the dividend yield, right? Yep. Whereas the money that a company like IBM is paying out in dividend, the money that a company is paying out like AT&T in dividend, there's a reason investors gravitate towards that. But companies like Apple, companies like Microsoft, they focus on the growth potential that the reinvesting can happen. It can put into, and so I just see that as a replacement. I personally would love to see them increase dividend, but I don't make that choice. They do see it though as a similar conversation as the dividend increase though.
Well, and by the way, they do increase the does anybody think they're not going to continue to increase it? They will, right? They're going to bump this thing up every couple of years, maybe every year with inflation. So
8% dividend increase last quarter.
Yeah,
I believe.
And if you on a broader point, that's why the stock market is great for fighting inflation. I mean, if Apple increases their payout in dividends by 8% every year or 5% every year, your suppose you own enough shares of Apple where their dividend paid all your bills. They're increasing your paycheck by 5, 6, 7, 8% every year, whether the stock price goes up or down. The income's going up 5, 6, 7, 8%. Forget 3% inflation, 4% inflation. There's your inflation beer, your Apple dividends.
So, Apple or Microsoft, buy and hold?
I'm buying Apple. I'm holding Microsoft.
Yeah, I look at these and obvious the IBM's the sell for me against those two juggernauts. I mean, they're just behemoths in the marketplace. They're 1A, 1B in everybody's assessment. Sometimes Amazon gets there, sometimes some of the other big dogs get there, but Apple and Microsoft are 1A and 1B for most market participants. I see Microsoft as the better long-term investing vehicle, and I see Apple as the combination trading and investing vehicle. I got Apple up 150. I think it's a buy above 150. I think that's the best trigger in the market, quite frankly. And Microsoft, I got as a hold.
Greg, what did we get wrong?
You know what? You guys are spot on. I just got a couple of different things that I look at. You guys know I'm a big dividend guy, right? So when I looked at IBM's 4.60, I thought, you know what? That does look somewhat attractive, but when you open the hood and peel back the curtain, things start to unravel a little bit. The payout ratio bothers me a little bit. Even though they got boatloads of free cash flow, they could afford to pay that payout ratio. The chart itself doesn't look that good. And the reality is, at $142 price tag, I can go buy Verizon for $55 and buy almost 3-to-1 shares and still get the same dividend from Verizon. So unfortunately, Big Blue is going to be a sell for me for that reason as well. So it's just not attractive enough to even for a dividend guy like me to get that excited. So then the battle comes down to Apple and Microsoft. I like iPhones, so my heart kind of, goes towards Apple. My head goes towards Apple from a chart perspective. I like that break into 150. I think that's fantastic. Now, having said that, Microsoft's got an awfully pretty chart too. So I'd have to pick another reason, a tiebreaker, if you will, between those two. And for me, it's the growth. Apple's got some pretty stellar numbers right now, but they're expecting a fair bit less the next year. Microsoft, I love their 16% this year, projecting 12% next year. They meet all the other metrics. The covered call is obviously the lowest of the bunch, but that's still impressive enough. You want to do 10, 12 of those a year, and then add in that 0.78% dividend. You're still getting a pretty solid return on that. They keep increasing their dividends, which is fine too. So again, that's the coin flip here. I would probably go the same way you guys did. Buy Apple and hold the two, the Microsoft, because it's a 200, 300, almost $300 stock now. Again, just maybe different reasons than you guys looked at it. But come to the same conclusion. I don't think you can go wrong with Apple or Microsoft. And IBM, like I said, if I'd owned IBM, 10, 15 years ago, I would be happy to own it today, because that dividend yield would be through the roof, right? Obviously due to the price appreciation and whatnot, but that's not the case we're doing today. So yeah, that's my take on it.